The 2016 presidential election was a momentous one. How can we make sure that your portfolio stays ahead of the curve? Let's find out. Here is our hypothetical portfolio based on the results of the 2016 American election. The short answer is that we would purchase 15 shares of VNQ, 10 shares of VGT, 1 share of VCR, and 1 share of VOO, each of these representing the 4 main candidates of the election. This results in a portfolio worth $2,709.27. This is the portfolio we'll be tracking throughout the various quarters moving forward. The long answer: why did we arrive to all of these values and ETFs? I chose various ETFs to represent each of the candidates. We should know by now that an ETF with built-in diversification is one of the safest ways to invest. So, Donald Trump, the Republican candidate, is represented by VNQ. VNQ is the Vanguard Real Estate ETF. Trump is known for his dealings in real estate, so there is a Vanguard ETF all about real estate investing. VNQ rates a level 4 in that it's risky but has more reward. It has an expense ratio of 0.12%. Well, what composes this ETF? The top 10 holdings include Simon Property Group, Public Storage, Prologis Inc., Equinix Inc., etc., various property holding companies. The total assets for this ETF are $60 billion. VNQ invests in stocks issued by real estate investment trusts, companies that purchase office buildings, hotels, and other real property. So this is a perfect fit for Trump. We will be purchasing 15 shares in this ETF. Next, Hillary Clinton, the Democratic Party nominee, is represented by VGT, 10 shares. VGT is another Vanguard fund. This is the Information Technology ETF. Seeks to track the performance of a benchmark index that measures the investment return of stocks in the information technology sector. Includes stocks of companies that serve the electronics and computer industries or that manufacture products based on the latest applied science. So I think this is a good representation of Clinton. The expense ratio is 0.10. It's very risky, but very rewarding. The portfolio includes such big companies as Apple, Alphabet, also known as Google, Microsoft, Facebook, Intel, Visa, Oracle, MasterCard, IBM. So tech-savvy companies with a total net asset value of $10.5 billion. There are 374 stocks in this portfolio. So Vanguard's Information Technology ETF is a good representation for Hillary Clinton. We're purchasing 10 shares. Next, from the Libertarian Party, we have Gary Johnson. He's represented by VCR, and we purchase 1 share. VCR is the Vanguard Consumer Discretionary ETF. This is an index that tracks the performance of a benchmark that measures the investment return of stocks in the consumer discretionary sector. This includes stocks of companies that manufacture products and provide services that consumers purchase on a discretionary basis. Now, the Libertarian Party is a smaller third party in the United States, and their motto is, "We defend each person's right to engage in any activity that is peaceful and honest, and welcome the diversity that freedom brings." So it's all about the individual. Therefore, VCR is a good representation. It also has a low expense ratio of 0.10%. It's on the highest level of risk and the highest level of reward. The portfolio includes 381 stocks with sectors such as advertising, apparel, automotive, broadcasting, computers and technology, footwear, etc. Names in this ETF include Amazon, Home Depot, Comcast, Disney, McDonald's, Nike, Lowe's. These top 10 holdings make up 42% of the total net assets. And those assets are $2 billion. Focused on the individual, the VCR ETF is a good fit for the Libertarian candidate, Gary Johnson. Dr. Jill Stein is another third-party candidate in the United States, the Green Party. We have VOO, 1 share. Now, this one was an interesting one to choose because Dr. Stein herself has investments in the Vanguard S&P 500 ETF. This ETF invests in stocks in the S&P 500 index, representing 500 of the largest US companies. This is a very diversified portfolio and basically is a snapshot of the entire United States economy. These are investments that Dr. Stein herself has engaged in. It has a safer level 4 risk and level 4 return. A very affordable 0.05 expense ratio. The portfolio includes 507 stocks from a variety of standard sectors such as materials, industrials, healthcare, and so forth. And these companies also include some of the most famous and profitable and important United States companies, including Apple, ExxonMobil, Johnson & Johnson, Facebook, Berkshire Hathaway, General Electric, and so forth. With a total net asset of $259.7 billion. So we have 1 share in VOO. Now, how did we arrive to these different number of shares? This comes from the data provided by uselectionatlas.org. Dave Leap's atlas is the go-to atlas to keep up to date with the minute detail of the elections. The votes are actually still being counted a week later, and we are seeing that Hillary Clinton leads Donald Trump in the number of the popular vote. So yes, to our foreign friends, in the United States, the candidate that wins the most votes doesn't win sometimes because of the electoral vote. That's a deeper topic for another video. But we're focusing on the popular vote, the vote of each individual cast in the election. As of this video, a week after the election, Mr. Trump has 61,251,881 votes, or 46.79% of the vote. Mrs. Clinton has 62,413,443 votes, or 47.68% of the vote. Mr. Johnson has 4,277,376 votes, or 3.27% of the vote. And Dr. Stein has 1,308,717 votes, or 1%. In the United States, a citizen may contribute up to $2,700 per candidate. So our hypothetical portfolio is a total of $2,700 to be split among the candidates in a proportional manner. The problem arises in that 3% of $2,700 is not enough to buy even 1 share of VCR. And 1% of $2,700 is not enough at all to buy one share of VOO. So I set this up that we will purchase at least one share of the ETF for each third-party candidate, and then we take 51% of the rest of that money for Clinton and 49% for Trump. So that's approximately $1,163.04 allocation for Trump, $1,210.51 allocation for Clinton, $126.03 allocation for Johnson, and $200.41 allocation for Stein. As of this moment, one share of VOO, which is the Vanguard S&P 500 ETF, is worth $200.41 per share. That's our Green Party allocation. One share of the Vanguard Consumer Discretionary Fund is $126.03, our allocation for the Libertarian Party. One share of Vanguard's Information Technology ETF is $118.69, and that's our allocation for the Democratic Party candidate. And one share of the Vanguard Real Estate ETF is $79.73 for the Republican Party nominee allocation. That adds up to about $2,700, which is our maximum allowed contribution, which is our portfolio price. So therefore, this is how our portfolio breaks down. I did a little bit of rounding up and rounding down just so that the numbers added up. But this will be our portfolio that we will track throughout the year to see which is more valuable. Trump versus Clinton, Stein versus Johnson, Republican versus Democrat, because it doesn't matter to some degree who's in the White House if you have a sound financial strategy. A diversified portfolio will beat any targeted strategy. So we have a variety of sectors, we have diversification, so the daily gyrations of the market should not be a concern for us. We need to look at the long term. That's the purpose of this portfolio. We might have good days, we might have bad days, but a long-term strategy will always pay off. In addition to this portfolio of various ratios, for fun, I'm also going to track a portfolio where I simply have one share of each of these ETFs representing each candidate. That portfolio has had a one-day change of $2.08 increase. So come back throughout the various quarters of 2017 and we'll see how the stock market reacts to the 2016 American presidential election. This has been Victor Campos for the VMC Inc. Financial News Network. See you next time.